All right, let's get right into it. The Trade Desk just dropped their latest earnings report for the second quarter of 2025, and as one of the biggest independent players in digital advertising, their numbers tell us a whole lot. So let's dive in and break down what's really going on.
But before we get to the dollars and cents, let's frame this with a bigger question. In this massive battle for the future of the open internet, what does a winning quarter even look like? Because it's not just about the financials, right? It's about who has the right strategy and the right tech to lead the way. Let's keep that in mind.
Okay, first things first, the Q2 scorecard. We're going to hit you with the big headline numbers right off the bat. And boom, there it is. $694 million in revenue for Q2. This is the top line number everybody watches, and it absolutely smashed what the analysts were expecting. Right away, this tells you demand for what they do is on fire. Now that $694 million, that's a 19% jump from this time last year. And here's why that number is so important. The CEO, Jeff Green, pointed out that this means they're growing way faster than the rest of the digital ad market. They're not just riding a wave, they're actively taking market share. So they're making a ton of money, but are they profitable? Oh yeah. They brought in $271 million in what's called adjusted EBITDA. In simple terms, that's a measure of their core profitability, and it shows they aren't just burning cash to get bigger. This is smart, efficient growth that's generating a whole lot of cash.
This table just breaks that down a little bit. You've got your official by-the-books profit, that's GAAP, which was $90 million. But most investors really look at that non-GAAP adjusted EBITDA number we just saw, the $271 million. Why? Because it strips out all the accounting noise and gives you a clearer picture of how the actual business is doing. And that 39% margin, for a tech company growing this fast, that is incredibly strong.
Okay, so we've seen the what. The numbers are fantastic. But now for the interesting part. Why? What's actually firing on all cylinders to make this happen? Let's pop the hood and take a look inside their growth engine.
Well, you don't have to guess. The CEO himself, Jeff Green, basically said it plain and simple. It's all about innovation. He specifically calls out Kokai, which is their AI co-pilot that helps advertisers make smarter decisions. So the takeaway here is pretty clear. Technology is what's driving the money.
And a huge piece of that innovation puzzle is in connected TV. You know, all the streaming services you watch. Here's the difference. With old-school TV, an advertiser pays, say, $10 to show an ad to 1,000 people in a whole city. With the Trade Desk, they might pay $20. Now, why would they pay more? Because they're not hitting the whole city anymore. They're targeting exactly the households that are most likely to buy their product. It's precision over spray and pray.
And we are not talking about a small operation here. The scale is just staggering. They can reach over 120 million households across more than 90 million devices. This isn't some tiny niche part of the ad world. This is primetime television now, and they've got the footprint to back it up. Another really smart thing about their business, they have not put all their eggs in one basket. Just look at this breakdown. You've got car companies, food and drink, healthcare, tech, the whole shebang. That diversity means they're incredibly stable. If one industry has a slow year, it doesn't sink the whole ship.
So all these impressive numbers, all this tech, it's all feeding into a much, much bigger vision. The Trade Desk isn't just trying to win today's game. They're trying to build the entire infrastructure for the future of online advertising.
Now, you've probably heard about the death of the third-party cookie, right? It's a massive challenge for the entire ad industry. Well, the Trade Desk's answer is something called Unified ID 2.0. And I love this. They don't call it a cookie replacement, they call it an upgrade. The goal is to create a new standard that keeps advertising relevant, but, and this is the important part, puts user control and privacy first. So how does this actually work? It's way simpler than it sounds. Step 1, you log into a website with your email, just like you do every day. Step 2, behind the scenes, that email gets turned into a totally scrambled anonymous code. And step 3, advertisers use that anonymous code to show you ads, but they never ever see your personal email address. It's a really elegant solution to a very messy problem. And it's not just UID 2. Another key pillar is something they call Open Path. The easiest way to think about it is they're building a direct superhighway from the advertiser straight to the premium publisher. It cuts out a bunch of unnecessary middlemen and toll booths, which makes the whole journey faster, cheaper, and way more transparent for everyone involved. All right, Q2 was a home run.
And the long-term vision is clear. So what's next? Let's take a look at the company's own forecast for the coming quarter.
And they are definitely not being shy about their confidence. For Q3, they're forecasting revenue of at least $717 million. You gotta love that phrasing, at least. When a company says that, it's a huge signal to investors that they feel really good about their momentum.
And once again, they're expecting that growth to be highly profitable. They're guiding to about $277 million in adjusted EBITDA. This just hammers home their core strategy: deliver amazing growth while staying incredibly efficient. It's not growth at all costs, it's smart growth.
So you might be thinking, okay, big promises, but can they deliver? Well, let's just look at the receipts. This timeline is pretty incredible. We're talking about going from just over $200 million in revenue in 2016 to over $2.4 billion in 2024. I mean, history doesn't guarantee the future, but that's a pretty convincing track record.
So, if you boil it all down, here's the game plan. They're doubling down on what's already working, like connected TV and their AI, Kokai. At the same time, they're pushing into huge new areas like shopper marketing and expanding all over the globe. And all of it is built on that solid foundation of tech like UID2. It's a really comprehensive strategy.
And that brings us right back to our big question from the start. When you put all the pieces together, the total dominance in CTV, a real answer for the post-cookie world, and this obsession with transparency and AI, you really have to wonder, is this what we're looking at? Is this the blueprint for the future of the open internet? It's a heck of a thought to leave you with. Thanks for tuning in.